Hello everyone, we are nearing the end of June. Half a year has gone. The REIT market has been down for 27 months, or to be exact, 2 years and 3 months. In this video, we examined how long more will the lackadaisical market conditions last, and to what extent will REIT show some symptoms of recovery. Is it going to be happening in the second half of the year, or do we have to wait until 2025? Once again, enjoy the video to the end, tell your friends about it, and subscribe to our channel. Seen from the chart, the FTSE REIT index went through a holding pattern, a cup and holding pattern as of December last year. We had warned in our previous videos, as well as for participants that came for our GCP Global Quarterly REITs classes, that if the holding pattern does not hold, in a run up towards 29th of December last year, then the REIT market will be poised for a big drop again. And it has happened. The REIT market actually fallen 14% from the high of December 29 last year to the current doldrums at around 625. Now, you're asking essentially, are there exhibiting signs now that interest rates possibly could be hitting a peak by the end of the year? After all, the latest dot plot that the Federal Reserve has actually shown is only indicating one rate cut a year. Yes, ladies and gentlemen, that's the chart for the dot plot. So the latest consensus is only one rate cut before the end of the year. Market participants are battling whether it's going to be September or December of this year. But take heart, take heed, ladies and gentlemen, because come next year, that's 2025, as you can see from the dot plot, there is a consensus for rate cuts as well as 4 rate cuts for 2026. But let's not basically run the guns. Let's rein in the horse first and see how does REIT look in the short. You can see, ladies and gentlemen, the REIT market is at 625, very near the double bottom that you saw first traced out in October of 2022 and then retested again in October of 2023. Now you'll be asking essentially, and we will also be answering questions pertaining to the likes of Capital Land Sanders, which has been hit by rising vacancies on business parks in this coming class on Saturday, 29th of June, for which you can sign up at our GCP Global website, whether stocks like this, good REITs like this, are poised for a rebound. Secondly, we will also be looking at the earnings potential of many of these REITs like Capital Land, our integrated commercial trust, Fraser Centrepoint Trust, to see whether to what extent are they resilient in this kind of market onslaught, assuming that the worst of longer for higher and higher for longer interest rate scenario continue to hold. And then thirdly, we look at some of the REITs that essentially may have bombed out or looks like bomb out, and whether they are actually value traps or indeed there's actually impetus to actually be moving forward. But look no further, because other than the 10-year bond yield, yes, ladies and gentlemen, this is a chart of the 10-year bond yield, which will give you an indication of where the interest rates movement is going to be. As you can see, since our last class on 23rd of March, you notice that the reason why the REIT market has been lackadaisical, for which we had forewarned in our last class on 20th of March, is that the 10-year bond yield has not gone anywhere. In fact, it has been strangled within the whole of and range of 4.2% and 4.5%. Thankfully, they actually came off the high of 4.7%. If you do recall, ladies and gentlemen, the high previously was 5% in October 2022. Obviously, we hope that it will not go to there, because then it will really strangle. Ladies and gentlemen, show some REITs like your Capital Land Sanders, your Capital Integrated, as well as Fraser Centrepoint Trust, and the three REITs. You notice that essentially on a DPU basis, most of them are trading at the highs of 5.5% above to highs of 7%. I think it's almost unthinkable just years ago that Maple 3 PAC or Maple 3 6 can trade at 7%. You'll be asking, therefore, is it now, therefore, time to actually get back into this REIT? Well, look at the if you look at the book value, actually all of them are trading at sharp discounts, or in fact, the premium on the book value has actually come down substantially. something that we warned about in the last 2 years. You notice in the last 2 years in our GCP global investment classes, in our various media interviews, as well as our various public talks and give, as well as even for those of you who listen to us at our YouTube video every week in, week out, you notice that we have told you that REITs are uninvestable when interest rates are high. And true enough, we have been right for the last 2 years. But we did also tell you that nonetheless, REITs, particularly good REITs, can be used for trading purposes to generate income. And in our investment classes, the next of which is this coming Saturday, which you can sign up, notice that we actually show you with real money positions that we at GCP Global trade, how you actually trade to make a good living. Do join us if you want further insight into just trading ideas with the catalyst for the price entry, the catalyst for the price exit, and which are key drivers that you'll be looking at the fundamentals. Look, when analysts actually talk about REITs, they talk about PU yield as well as price to book value discount, but they didn't tell you whether the value is going to get even worse or even better. In our classes, we tell you the catalyst and the key turning points. So, do come out. This chart shows the FTSE REIT market going into 27 months of correction. Now, compare this, ladies and gentlemen, to the pandemic crisis. The sell-off was only 1 month. Compare this to the global financial crisis in 2008. Holy shit, that was smashed badly. It took 20 months. But this time around, hey, we're not as bad as the global financial crisis. We will also be delving in detail as to all the why is it that it's different already 27 months of correction? For example, is it therefore time for a recovery? Particularly the likes of Capital DC REIT as well as Maple3 Industrial Trust. For example, essentially, Maple3 Industrial Trust is very interesting in the sense that, the two of its properties that they have in Milwaukee and another place in the US is actually being turned their data center into nurseries. How does that affect valuation, and to what extent would investors see it as a good prime indication for real estate data center plays? Now, the other things that we'll be talking about essentially is the other sectors like the industrial sector, which other than the industrial park having problems, are there any other problems itself? So you see, ladies and gentlemen, in our classes, we do a lot of foreseeing of problems before they actually crop up. Not after the problem that has cropped up, then the impact on the share price begin. And then people asking, hey, how come, to what extent will the share price hit? Instead, we actually look at the strategic focus, the tactical analysis on that, as well as basically how to position. So in particular, we will be looking at capital length, integrated commercial trust. You notice that it's been a box trading session, for the longest period, almost 6 months by now. But then you can still make good money, as what I'll show you on my personal trade this Saturday in our class. Now, second one is capital lenders. Now, it was pointed out to us, and we actually informed capital lenders management. How is it that you're offering two for three kind of ranking? It's pointed by one of our investors. Now, GCP Global investors are actually high net worth individuals, family offices, and index funds, or REIT managers. So they actually pick things up very closely. And there is a very good fraternity to be involved in, a very group of people to be involved in, to understand and fully be the first to be updated on REITs before they go bad, or if they actually know to be right. Now, then the last one we talk in detail is Praises Center for Trust. Now, we did tell you, 2 years ago, stay away from the placement. We did tell you last year again, stay away from the placement at 218. And guess what? All right, as you can see, it has terribly tolerated underperforming. It's been at below 218 for the last months. As you can see, there's a huge opportunity cost of money involved. So, ladies and gentlemen, you want to grow your money, you want to maximize your potential in real estate investment trust, do join us for our class. Till next week, we hope to give you further information on the REIT market as well as the prospect for second half 2024. Adios.